Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 2nd day of August, 2017, and this is the Daily Report for Gold and Silver. We do have moderately strong pressure in the precious metals markets, that in light of a weaker dollar, with gold and silver both trading under pressure. Yesterday, we sent out a trade alert to effectively trail our stops up. Of course, we'll talk about that in detail when we pull up our technical studies. As for net changes on the day, when we look at gold, gold settled off by about $6.60 to close at $12.7280. That is basis most active August. We have a current position in October, and we have an inverted market in which October gold is slightly less in value than August gold, and we'll also talk about that. Silver, also under dramatic pressure, actually trading off by about 1.2% on the day, giving up about 19 cents at $16.57. Effectively, we pulled profits on our silver trade. And again, we will talk about that in detail as we pull up our charts. As far as other markets go, a dollar closed effectively lower at 92.74, and the big news is a 22,000 Dow. Dow Jones Industrial Average closing at 22,016, NASDAQ at 63.62 unchanged, and the S&P's in essence unchanged at 24.77. Traders, there's absolutely no doubt that today's trading action has put significant pressure on pricing in both gold and silver. As we look at gold futures right now, this basis the August contract sitting down about $7.10 at $12.7220. The low in the August contract is $12.68. What's important is the low that came in the October futures contract, because that's where we have an active and open trade going, and the low was $12.65. We'll talk about that number in a second because it's obviously critically important. As we look at the marketplace, we can absolutely see that we have some resistance that has come into this market at about $12.80 basis most active August contract. Today's move is significant in that it puts the potential for there to be a slight correction as this market has moved up roughly $80 from these lows at about $12.03. And if it does begin to come down, there are certain areas we would want to look at, $12.62 being one of them and $12.51 being the other one. And traders, that does bring us to our current trade. And to do that, I've gone ahead and pulled up our October contract of gold. Yesterday, I sent out a special trade alert for both gold and silver. We'll talk about silver in a second. But in that, I had suggested that all of our clients go ahead and trail those stops higher to just below $12.65. The low today was $12.65. So effectively, we are still in the trade, although we are precariously close to that stop point, with current October gold trading at $12.69, down $7.10 on the day. There were a couple of reasons behind the placement of this stop. One of them is that was a former low that we had saw, and the other one is that the actual number here, 1266, is 61.8% retracement. And of course, it's a retracement from the move from 1300 down to these lows at just above 1200. This $100 correction, the 61.8% retracement, comes in just at that area, about $1 higher than our stop. My recommendation for gold is to maintain our current long position and to maintain our stop effectively now up at around $12.65. And traders, at the same time that we have seen some strong pressure in the gold market, we've also seen that in silver. Silver currently trading off by about 1.2%, so a sizable downdraft today, trading off by about 20 cents per ounce, currently at 16.56.5. That is basis most active September contract, and that is also the current contract we are trading. And as you can see, current pricing is at $12.56. However, yesterday I did make the recommendation to move our silver stop to just below 1650. That was right here. And the low today came in at 1645. So we are effectively stopped out and have effectively pulled profits on this current trade. We got in at 1598. If we mark ourselves out even at 1645, that gives us 47 cents of profit based upon a 5,000 ounce contract size. That nets out to about $23.50 in profit per contract on silver. To me, that's a pretty good trade. I'm absolutely pleased with that. Well, did we get out too early? Whether or not I get out too early or not, I think of a story by Herbert Hoyle. And Herbert Hoyle was one of the most successful stock traders back in the 50s. And once he was interviewed and the interviewer asked him, why is it that when the majority of traders in equities markets consistently lose and have a very, very difficult time pulling any kind of profits consistently, I always sell too soon. Obviously, we'll maintain our long gold position. And traders, in as much as we talk about outside forces that influence gold pricing and the fact that gold and silver are under some pretty strong pressure in trading today, I cite the following market as one of the primary reasons that we do have some pressure on gold right now, and that is the fact that we absolutely have a risk-on environment. Dow Jones Industrial Average currently at 22,015, and that is going into the market right as the market closes. We are recording this at 10 o'clock in Honolulu, which of course corresponds to a 4 o'clock close in New York. And interestingly enough, that risk-on environment and all of these other outside forces has not stopped the fall of the dollar. Dollar continues to trade lower on the day, although marginally lower. So in fact, when we looked at lower pricing in gold and silver, that was after accounting for some strong tailwinds that were provided by a weaker U.S. dollar, down 0.14% at 92.77. And as you know, I am on record looking for the dollar index to move back to 9,200 on the index. And as I've also stated, any kind of significant break below that on a technical basis puts the future price of the dollar in terms of the dollar index value at real risk. And that, of course, is on a technical basis because prior to the market trading in this defined range between 92 on the upside and let's say 100 on the downside with this one blip to 104, this market had been coming up from about 80 on the dollar index. So technically, when we look at this chart, we don't really have any clear-cut areas of support in the dollar. So if you think what we've witnessed was a free fall prior to the market breaking below 92, it could have a significant acceleration of that sell-off if in fact the market continues lower and significantly breaks through 92. Effectively, we were stopped out, but more effectively, we did pull profits on our silver trade. As I talked about during the chart section of today's program, we basically pulled about 47 cents out of the market, an effective profit of $23.50 per contract, and that's based, of course, on a COMEX 5,000 ounce contract. With the jobs report due out on Friday, and this oscillation between whether or not there is a high probability of another interest rate hike or not this year, we have seen momentum shift almost day by day in the gold market and the dollar and interest rates in terms of sensitivity. I would expect some increased volatility, and depending on how the jobs report comes out will really determine the next move in the precious metals. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.